Hi, this is Devin from Visions, and on this episode of Cash Clips, we're talking financial preparedness plans and why they're so important. And I'm not going to lie to you, it's kind of a dense topic. We're going to be covering a lot, from how you can assess your budget and identify the places where you can trim the fat, and then how you can move your money around, and then how you can evaluate your plans for the future. So guys, let's just talk about the elephant in the room. It's COVID-19, and as much as I'd love to share my favorite memes and talk about quarantine beards and quarantine weight gain and how we all made sourdough for a few months so then we let our starters die, the fact is millions of Americans lost their jobs, and it really highlights the importance of having a financial preparedness plan. And it's not just for the bad, it's for the good too. Think about if you need a down payment on a home. Think about if you're buying a car or expecting a new member in your family. Fact is, the name of this series is Cash Clips, and we need to talk about finance. And ultimately, if you look at the statistics, most Americans can't even cover an emergency of $1,000 or more. And when you compound that by record unemployment, that really highlights why it's so important to have a financial preparedness plan in place. So the question is, how much money should you have set aside for the unexpected? Well, most experts say anywhere from 3 to 6 months worth of your income is ideal for a financial preparedness plan. The question is, how do you get there? Well, I have an acronym to break it down, and we're going to go through each one step by step. So AID, assess, identify, divert, and evaluate. So the first step in saving is figuring out how much you can save. And that's why you need to assess your income and your expenses. As far as income goes, there are really 3 main types. There's your gross income, your net income, and then your supplemental income. Now, your gross income is what you actually should be making. That's your salary. That's what happens before everything comes out. But the figure that we want to work with is your net income. That's the bottom line on your paycheck that shows the actual dollar amount you're taking home after insurance and taxes and retirement come out. And your supplemental income, well, that's like a bonus if you happen to receive one for work, or if you happen to receive child support or alimony. All that can go into your income bucket. So let's talk about your expenses. There are really 2 main types. There's your recurring expenses and your non-recurring expenses. So the recurring stuff is pretty straightforward. You're going to be doing that month to month. Think your rent, your insurance, your cell phone bill. And then the non-recurring stuff is your entertainment budget, going out to eat, having wing night with your friends. And really, at the end of the day, what you want to do is get a baseline for how much you have coming in the beginning of the month and how much you have going out overall. The next thing you should be doing is identify where your money is going. So figure out where you can cut the fat on your spending. Are you shopping on Amazon every night at midnight for stuff that you'll never use? Do you have a gym membership at $10 a month and you never go to the gym? Do you really need those items? See if you can cut back on that discretionary spending and really just focus on the things that you do need to spend money on. And that's not to say be a robot. We're human beings, we need to have some fun. So give yourself the freedom to do it, just do it responsibly. A great place to cut some of your expenses is with your insurance, because we all gotta spend it and we're all spending too much. So call up your agent, see if you can save money by bundling, see if your employer offers a discount, or even call your bank or credit union and see if they give a membership-based discount, because a lot of them do, and those dollars and cents really add up. So another big expense that everyone has is their cell phone, and there are really 2 ways that you can cut back on your expenses with this. First things first, check your plan, call your provider, see if you're really getting the best deal that you can. Another big thing, the phone itself. So think about hanging on to your phone for an extra year. Do you really need to upgrade? Do you need the fancy model with like 17 cameras on the back of it, or however many they come with now? Now let's talk loans and credit cards, because we all have them and we're all paying on them. But that doesn't mean that you have to be spending as much as you are. Consider consolidating your debt, for example. So if you have a bunch of credit cards and you're paying 17 or 30% interest on them, think about a consolidation loan. Chances are the interest rate's going to be a lot lower, and consolidating those debts might even give you a lower monthly payment. So call your financial institution, see if you qualify. Be advised that they'll need to do a credit check, so check out your credit first and see if it's going to do more harm than it will good. So finally, let's talk about those little things that you can trim out of your budget to help you save even more money. First things first, buy stuff in bulk, whether it's toilet paper, chicken, or even toothpaste. Chances are, if you're buying the bigger package, you're going to save more money in the long run. Another really good way to save some cash is to make your food at home and avoid going out. So think of your leftovers. Just don't be that guy who brings fish into work and microwaves it, because everyone hates that guy. Next, Think about your utilities. So adjust your heating and cooling even by a couple degrees can mean big savings on your utility bill. And don't discount smart thermostats. A lot of utility companies will actually give you a tax credit for installing one. Just call them up and see if they offer it. And finally, stop buying avocado toast, because you probably could have bought another house by now if you did. So next up on our list is divert. And this is where we're going to take that money that you set aside in the identify portion and direct it into a separate savings account. And that's key. You really want this to be as hands-off and set it and forget it as possible. So put it into a separate savings account that doesn't have debit card access. You'll be less likely to dip into it and pull out of those savings. But the good news is, once one of those life events comes up, whether it's your car breaking down or, God forbid, if you lose your job, you're prepared. And remember, you're shooting for 3 to 6 months worth of your income, and you can start as small as you want, whether it's $25 a month or even $50 a month. The final portion of this acronym is evaluate. And the fact is, you should be reevaluating your budget and your income and your financial preparedness plan all the time. At least consider a once per year review, ideally coinciding with a pay raise if you happen to get one annually. So take all of your income, take all of your expenses, see if anything's shifted around, and if you do get a pay increase or a bonus, consider diverting some of that money into your emergency budget. Every dollar and cent adds up. And if you find that you're struggling, reach out to your financial institution. They have people there who want to help you get on the right financial track. So if there's one big takeaway here, it's that you should have 3 to 6 months worth of your income saved in a separate account. That way you're prepared for the good and the bad. And as you're trying to come up with your financial preparedness plan, remember the acronym AID. Assess, identify, divert, and evaluate. So thanks for sticking around, and I hope you learned something good today about creating a financial preparedness plan. Remember that you can always contact your financial institution for guidance. They're there to help you. If you liked the video, we've got a lot more content on our YouTube channel. Feel free to like it and subscribe it. The link is in the description. And I'm Devin from Visions. I hope you enjoyed this episode of Cash Clips.